Today, my guest is Omar Khan. Omar is a chartered financial analyst. He's advised on over 3.7 billion of capital financing and merger and acquisition transactions. He's the principal at Boardwalk Wealth and has syndicated multiple large deals across the U.S. And in just a minute, we're going to speak with him about raising capital, working with institutional investors. And before we do that, though, I want to remind you, if you like the show we're doing here, Commercial Real Estate Pro Network's CREPN Radio, there are a couple things you can do to help. You can like, you can share, and subscribe. And as always, please consider leaving a comment. We'd love to hear from our listeners. And also want to remind you, if you'd like to see how handsome our guests are, be sure to check out our YouTube channel, and that is Commercial Real Estate Pro Network. With that, I want to welcome my guest, Omar. Welcome to CREPN Radio.
Hey, thank you, Darren. It's a pleasure being here.
Well, I'm really looking forward to opportunity to talk with you today. Before we get started, though, if you could take just a minute and share with the listeners a little bit about your background.
So, look, my background is, somewhat common to a lot of folks who went to these top 10 business schools, graduate from finance, and you do the whole thing. If you're in bigger cities, which I was, I graduated from the University of Toronto. Not the best time, 2008, which is not the best time, but I networked around, got a good job in the Royal Bank of Canada, portfolio management. And it's that whole route. Either you go to portfolio management or you go to sell-side advisory, which is investment banking or equity research or hedge funds. You do that grind for a little while. You either stay at one company or you kind of bounce around depending on how good your network is and what you want to do. And I always wanted to do multiple things. And I was on the buy side, which is basically, hey, we're actually going to be the people acquiring these deals and structuring these deals. And also on the sell side, which is the ones people who are advising on these deals, like investment bankers are and a lot of these other guys are. So, which I didn't know at that time was somewhat unique. I mean, earlier on in the career, a lot of people don't make those switches. I did. Part of that was because I just wanted a broad-based network of understanding of what goes on. I was always very curious. And then I moved to the US a few years ago. Age-old reason for a girl. My wife's a physician. She was right about done with her residency and everything. And for her to move up to Canada, she would have to do the entire thing again. And for me, in the kind of professions that I've been in, my skill set is very cross-transferable. So it was easy for me to move just south of the border. And that's how we started.
Got it. And currently you're located, is it Dallas? Is that where you're located?
Well, right now I commute between Dallas and again for a girl, same girl, by the way, different girl. My wife accepted a position in a small town in Oklahoma, home of Blake Shelton, by the way, Ada, Oklahoma, if you listen to country music. I don't, but apparently he's a big deal. And that's a nice place, so I commute back and forth. And plus, with my business, I'm either on the phone, on the internet, because you've got to take care of stuff, and on a plane. So frankly, if you've got a phone, internet, and access to an airport, it doesn't really even matter where you are.
Yeah, you're in business, right?
Yeah.
It is crazy to think just how small the world has gotten, and just the ability to literally kind of Jetsons, have these video conversations that were just years ago kind of somebody thought about it. But
you'd be very surprised. I was talking to a friend of mine a few weeks ago. My dad is an engineer, and he was doing a lot of telecommunication stuff back in the day, like late 80s, early 80s, all the way to the 90s. And Siemens had come out with a broadband link back in the day, so you could video chat. This was like they were prototyping this out and testing this out. And I still remember, because I grew up in Pakistan, and they were prototyping it out here. So I think it was 91 or 90, where you were in one city, and a bunch of these engineers got together. They would video chat, and with a delay, a guy in the next city would reply back with a video, and people's minds were blown. Like, oh my God, we're in the future. Right. And this was like, late 80s, early 90s? Right. And now look, here we are. This is a consumer technology we can use on our phones.
Yeah, no, it's funny because I think for me, for the transfer from the industrial or the commercial to the, like you said, the consumer use is really what's really kind of blows my mind, where now it is ubiquitous. I mean, it's whether you can do it on your phone. You don't even need, any special equipment. Just push the button and there's grandma or whoever you want to talk to.
Yeah. So. And what's funny is if you read a lot of sci-fi, like Asimov and stuff, we are now becoming like androids. I mean, like the phone is an extension of our body,
Right.
right? And without a phone, you feel kind of naked a lot of times.
Sad but true. But yeah, it's and actually as we kind of are going through the COVID-19 thing right now, it's almost even more of a tool to keep from being isolated. I mean, there's
Oh yeah,
the
I mean,
physical isolation to at least stay connected there. So
I don't even know. I mean, I think a lot of people would get divorced if they didn't have a phone.
right. That's probably true. Well, hey, enough about the technology stuff there. What I'd really like to talk with you about today is, given your experience and your professional experience and your work as a syndicator, is about raising capital. Um, I think there's well, beginning like 2010, 12, there was a lot of people that started syndicating, and as that their experience and success was reported, and people recognized it, more and more people got in, and pretty soon everybody's syndicating and everybody's trying to raise money. And what I recognize now is that we have kind of the markets matured. Currently, we're in this COVID-19. We'll see what shakes out. But I want to talk with you about how to distinguish yourself and, raising money from like institutions and professional investors, and how to set yourself apart, and what you can, um, speak to that based on having had the experience of being the one that was approached, and now I presume you're in the opposite side of the table looking for capital.
Yeah, look, part the two most easiest ways of doing this are either you're extremely tight and have a track record operationally, or you are just a fantastic marketer. Really, but if you're a marketer, a lot of times the institutional capital doesn't necessarily chase you as much. I mean, you have to do a different type of marketing, right? These people don't necessarily care about podcasts, or I don't know if you went to some conference on the weekend or something like that. They just don't have time for this kind of stuff. Because the reason is they're already sophisticated. They can already look, like, for instance, I can look at a P&L, and if it's in one of my markets, within one of my sub-markets, I can easily poke holes in it within 5 seconds and know, okay, here are the big questions. Now, I'm not saying it's a hole in the sense that it's wrong. It's a hole in the sense that, why is this not answered? Right? So you need to be really sophisticated, understand your financials inside out and your operations inside out. So like a lot of folks you were talking about saying, in the last few years, they've started syndicating. A lot of these are part-timers. And what happens is, bears make money, bulls make money, pigs make money, but hogs get slaughtered. Right. So a lot of these guys who were high on the hog, who were, maybe working in IT or accounting or finance or whatever, doctor, what you name a profession, right? Engineer, whatever it is. And they were doing this part-time. They can't raise institutional capital because those people, nobody's going to give you, stroke you a $10 million check 5 times a year and kind of half expect you to kind of half-assedly do it in the weekends, right? So number one, you need to have a track record of either professionalism or deep subject matter expertise, right? Because these are already sophisticated pools of capital who already have experience. And by the way, you've got to realize you might be the only, like, for instance, for you, this might be a big deal, right? You're talking to this guy, it might be a $10 million check, and you might do it once or twice a year. This guy has 10 of these meetings before lunch every day. Right. So for you, it's a one-off occurrence. For him, it's an everyday thing, right? So you're just a number. So what you really need to do is stand out for the right reason. Then what you just need to, basically, for the lack of a better word, understand operations just doesn't mean, well, you can kind of half-assedly talk about it. You need to show your bench strength. Hey, who are the people on your team? What is the backup behind it organizationally? What does your structure look? Then you've got to show them, okay, this is how my reporting is. A lot of folks can have everything, but they struggle on the reporting side of things because these people have very onerous reporting requirements, right? And you're never going to make headway, right? So you really need to be holistically combined. You need to have a holistic set of experiences. And if you don't have that, the best bet is for you to go get that first, get a track record, start the ball moving, and then start looking at bigger pools of capital.
Got it. So you mentioned, I mean, obviously all the reporting and that, and just the sheer
and
size.
Just to let you know, by the way, the reporting and all, you would think, you understand, that's not a real estate related thing, right? It's not like you could be a fantastic operator and still have really bad accounting.
Right,
right?
right, right.
So you understand these are organizational things, like how strong and robust is your organization. These are qualitative things that they're assessing, as opposed to just, hey, did you have a good deal or not? Because all this trope about, hey, find a good deal and the money will follow, right? Yeah, that shit isn't really true, man. I mean, I like these one some guru I was at some conference was saying this. I was like, okay, you got $80 million, buddy. I can find you $100 million in deal, no problem. Can you show up with $80 million cash tomorrow? Because if you can't, I mean, then you got to start, less talky, more walky, right?
Right, right, right. Yeah. No, and given that, I think just the sheer size of the deal, or not the deal, but the pool of capital that the professionals are looking to put to work, whereas the smaller operator is looking for 50, 100, or a couple $100,000 type thing. And just the sheer volume. I mean, and how many opportunities they look at on a daily basis. How you said 10 before lunch. How many do you think they look at in a year, and how many?
Thousands of them, thousands and thousands of them. They have to, because you have to realize the entire job of them. And by the way, they are capital providers. But look, I raise my own money and I run my own projects. I say no to 99% of the opportunities that come across my table. And I know I'm not the only one who does that, because there are countless other operators that I respect, and I get their opinion lots of times on things, and they do the exact same thing. You have, in any profession, if you are wanting to succeed, or you're in a position to succeed, or you put yourself in a position to succeed, you have to have the ability to continuously say no. That's just the way it is.
No, definitely. So on the obviously the team members you talked about, and the reporting, can you go into any kind of like the depth of reporting? I mean, obviously you mentioned like the holes in financials. I'm assuming that somebody like you that's worked on both sides and the experience. What are some glaring tells that you would you commonly see when a deal is presented to you?
Oh, number one, everybody says rents are $200 below market, and this is below sales comp. Like the price at which they're acquiring is below sales comps, and you're like, yeah, but you pick the comps. So
right.
You pick the comps. Hell, dude,
Right.
I'll pick comps, and everything I do is gonna look like the greatest deal in the world. So number one, but again, this comes down to product knowledge, market knowledge, right? So you have to be a product expert and a market expert. So for instance, if I'm in Atlanta as an example, and I'm looking at, say, a place like, say, Fairfield or Peachtree City in the south, or say Marietta, Alpharetta coming on the north, I'm not going to compare that to College Park, which has just different demographics completely, right? Because I compared that, and I buy a deal in College Park, and on paper I was like, look, there's $800 of rent difference, and sales comps are so different. And you've got to realize, look, a lot of newbies say, oh, well, I'm just taking it from the broker. Well, the broker has no obligation to you. I mean, you're not the one paying the broker. The broker, and again, by the way, you cannot blame the broker, because the broker is a salesperson. They have to do what is in their best interest, because they don't owe a fiduciary duty to you.
Right.
You owe a fiduciary duty to yourself, to your family, and to your investors. That's why, you got to start walking the talk. You can't just take easy ways out. You got to put in the hard yards. It's like any profession in the world. You've got to put in the hard yards. You've got to do your research. And if you don't do that, you're going to be taken for a ride.
Right. Now, when you're looking into a new market, do you physically go there and walk it and know the brokers? And
you have to do it. You have. Look, let me tell you this. A lot of guys, for some weird reason, still have it in their head that I'm just going to go direct to seller. I just want to bypass the broker. Yeah, let me explain that to you. That works if you're buying a $50,000 house in the middle of nowhere in Podunk, Mississippi. That doesn't really work if you're trying to buy a $30 million asset in, say, Jackson, Atlanta, Dallas, San Antonio. People don't got time for this kind of stuff. People tell me, oh, I'm going to do skip tracing. I'm going to do this. I'm going to do that. I was like, again, look, man, just think about it logically. Do you think a guy or girl that owns, say, a $30 million piece of real estate, they are that dumb or that unsophisticated, and they own multiples of these properties, right? It's not just one of them, right? They own a few of these, right? They're that dumb that you're just going to randomly call and you're going to give your rags to riches story, and they're going to tell you, oh my God, just I'm going to help you get yourself up from the bootstraps. You go, man.
Right. No, I've been waiting for your call. Oh my God.
All my life, I've been waiting for a call. I had
Thank
this
you for
30
your
million.
postcard.
Yeah, your $30 million, I really wanted to burn it into the ground. The only reason why I worked for it was because I wanted to burn it into the ground. That
Right.
stuff doesn't really work. You have specialists called brokers, okay? There's a reason why these guys get paid so much money. And it's not just because they all wear fancy suits and nice ties, because they do, right? Or work in nice offices. Look, again, it's like any high pressured profession. It's like being a physician, an insurance salesperson, anything in the world. These people have put in the hard yards. They've made relationships over 5, 10, 20, 30 years. So when somebody's even thinking about selling, they haven't decided to sell, they're thinking about selling, they pick up the guy called, hey, John, yeah, what do you think about this? I'm telling you, even right now, I'm a seller a lot of times. And with the top, because every big market only has top 3 or 4 big brokers. It's like any other business in the world, right? Insurance sales,
Right.
kind of the same thing. A lot of times I pick up the phone and be like, I'm thinking about this market. If I don't have to tell them the property, I'll tell them the market, right? Yeah, I'm thinking about the submarket. What's your take on the submarket, right? And they'll be like, look, rents are going up, but there's lots of delinquencies. And then immediately they'll ask, but what property did you have in mind, right? So you got to be a little coy depending on the situation. But you have to realize they are in the business of developing relationships. So they are providing you information, but you also got to step up to the plate and do your part, right? You can't be a tire kicker.
Right. Now you got to be ready to respond.
Yeah, but they want to do this, by the way. Just let's be very clear. They want to do this because a lot of this is just relationship building for them. Look, think about it. Even if somebody takes 3 years for a sale to happen, this is not like buying a $100 pair of Nikes. This is like a $30 million sale.
Right.
And one guy who does a $30 million sale, I bet you he's going to do 2 or 3 more sales. It's just not going to be a one and done. Right. So the sales process is very long, but you make like 500 grand a sale, right?
No, it's worth a couple of year courtship there to the finish line there. So no, that's good.
But it's the same with this institutional people. You said, a lot of times the first ones they'll pass again, unless you have really good relationships there. But again, what people are assessing to see is, hey, are you around? Do you do a volume of deals? If you don't do a volume deal, well, you better have a pretty damn good reason why you're not doing it, right? And are you a consistent player in the market? Or are you one and done? Are you a flash in the pan? Or are you out there? Because trust me, these exact same people also talk to the same people that you want to talk to. They talk to the brokers. They talk to the lenders. In fact, a lot of times, if I have to go raise pref equity, right, from some of these guys, they'll talk to the lender, be like, hey, you've given this guy 3 loans. What do you think about him as an operator, right? And a lot of those guys off the books will be like, yeah, I really like this guy. He's been paying on time. But otherwise, too, when we talk to him, he's got it going on. Versus, yeah, that guy got a good deal, but I don't really think he's a good operator.
Right.
And it's a small world, by the way, just to be very honest with you. It's a very small world these days.
No, I mean, absolutely. The how word spreads, if you're well capitalized and you're a good operator and you do what you say you're going to do and are a closer. I mean, we've talked to many people about that. Once the law of the first dealer, I can't remember. I think Michael Blank might talk about that. But just once you have a deal, then others tend to present themselves. But again, in these bigger properties and larger capital deals, I mean, that the level of your sophistication will speak volumes to the opportunity and whether or not others are willing to back you or participate. Yeah.
And by the way, even if you don't have a deal, let's assume you're new to a market, but you have a level of sophistication, you understand these things. It's like industry lingo, right? If you're speaking the same language at the same pace, at the same intensity, and like the top 3 ways somebody's going to screw you in a deal like this, right? And you already be like, and somebody can be like, look, man, come on. Just look and be like, look, come on, man, these demographics are just shit. Right. The guy, trust me, people don't, no matter what you might think, professionals don't get offended because they realize it's a game. And part of playing the game means that you have to keep assessing your counterparty. Right? It's like kids, you got kids?
Oh, yeah.
I've got a kid and another one on the way. And every single day, my kid is 2 years old. And he keeps pushing the boundary. He wants to keep knowing where is the boundary where my dad will start screaming.
Yep.
right?
No,
And they're
it
doing the
doesn't
exact
stop.
same thing. Yeah.
It doesn't stop.
Oh, it doesn't stop. Okay, well,
Uh,
that doesn't help me at
no,
all.
no. It's just well, I think that what's funny though is in the kid example is that well, the boundaries they become known, then there's a new presentation that you haven't anticipated.
Yeah,
just
yeah,
in
I'm
that
learning that the
situation.
hard way.
Well, in just that situation, I've mastered yesterday. That's where my point of reference is. And my wife's always thinking like, weeks, months, years down the road kind of thing. And I'm always the one that's kind of caught off guard. Wait, but I perfected that. But even in the real estate thing though, you're talking about, uh, and I think what I'm hearing from you is more about just the consistency about staying in, whether it be the brokers, staying in touch with them, and like that, creating that relationship, whether it takes 3 years to do a deal.
Mm.
I'm assuming that the same with the capital.
It's the exact same thing. It's a continuous look. A lot of people think it's really funny. Like sometimes I joke, I was like, I'm not in the real estate business, I'm in the marketing business, right? Where
Yeah.
I just have to keep staying in touch with people. And you know what's really funny? A lot of times the best results I've had are with people for the first 5 calls. I felt like, oh my God, I'm trying to pull teeth out of this guy, Jesus Christ. Right.
Yeah,
And
right.
suddenly maybe the timing is right. Maybe the guy's having a better day. Maybe I'm having a better day and I misread the situation earlier. Damn, it works the sixth time. But you have to get to the sixth call, right? If you drop out of the third call or the second call or the fourth call, this doesn't really work.
That's funny. I know in insurance, I think it's, I forget, 100% of the salespeople will make the first call, 50% will make the second call, and it drops off dramatically, but the buying starts, way out, 12 plus calls kind of thing. So it's,
and look, a lot of times it's disheartening. I'm not going to be honest. I mean, nobody likes to get not make any progress, but that's just the way it is. I mean, what are you going to do about it? You can complain about it, or you can just go do your job and consider, it's just a job. What are you going to do about it?
Right. So let me ask you, with the we've talked about kind of the consistency and the presentation. What about just the security of the opportunity at a professional level? I think a lot of times, newer investors are they're attracted to the high returns or some sort of a high cap rates or can you speak at all to just the opportunity, not just the numbers, but just the security, the nature of what they're looking for in a return?
Look, I mean, the way I look at it is, thank God we live in a free enough country where we're all allowed to do really dumb stuff.
Yeah.
That's the way I look at it. Thank God, because who would want to live in a country where I can't even go do dumb things? Okay.
Right.
So all I'm trying to say is, if somebody wants to go do dumb things with their money, it's their hard-earned money and it's their God-given right. Right. The way I look at it is, look, if you're smart enough to work, in any profession, if you saved $100,000, it's not easy to save $100,000, right? For most professions, right? Which obviously means you've at least understood the concept of delayed gratification to a certain degree. Now, if you're going to take that, whatever, 2, 3, 6 months, 1 year, 2 years worth of savings, and you're going to go to some scammy real estate conference, and you're going to have a guy with gold teeth and a shiny suit tell you an investment deal in 5 seconds of him being on stage, and you're that desperate to lose your money, well, this is going to be a really good life lesson for you, right? So what I tell people is, look, if you're going to be that gullible, this is just God's way of telling you that you're a dumbass. Right. And let this be a life lesson, because we all know you already know the pain it takes to save money over a period of time, the sacrifices you have to make. So take a step back. The deal of the century comes back every 2 weeks. And look, we're all going to make mistakes. What we're all trying to do is reduce the level of intentional or avoidable mistakes we can make. We're all going to make mistakes. Nobody's perfect, right? So don't be gullible. Anytime you feel like you want to take a decision, sleep on it. That old saying, sleep on a thing and you get up in like 1 or 2 days, whatever. And, then you decide whether you want to take that. Don't let people sweet talk you into a deal. But hey, if you're that gullible, then I got a bridge to sell you,
Right. Oceanfront property in Arizona.
Oceanfront property in Arizona. I love that song.
Yeah. Well, what's funny is, and funny, sad, but I think that,
Dad, look, don't worry. I'm not trying to make fun of somebody here. Right? I'm trying to say, look, take a step back is what I'm trying to say.
oh, but I think that across all markets, whether it be the stock market or real estate or, what have you, um, the, the big wins are what really get people's attention.
Yeah.
And the work that was put in before is rarely ever recognized or understood or even considered.
Yeah, it's the 10 failures before nobody looks at. It's the
Right.
one win everybody just like goes and like this and looks at.
Right. And just that, and it captures the imagination, and people are not happy with their current circumstances and just thinking, man, if I just had that one lottery ticket, if I could just get that one thing, and
Hey, Darren, I think about it all the time.
Yeah.
Doesn't mean look, I'm going to be honest with you. I'd love to have a private jet.
Right.
Doesn't mean I go do, I spend all of my income on lottery tickets, right? My point is just because this is some concept lately, which, to be honest with you, man, I just don't understand these days. I was like, look, what difference does it make that you want something? Like, I don't even understand. Like, what difference does it make if you want something? I mean, I want to be like Michael Jordan. Well, I'm not jumping 7 feet into the air. I mean, right. Nobody's signing me up for a professional basketball contract. So just because you want something doesn't mean you should get it. Right. Or the other way around. My point is wants and needs are different. And it's very shocking to me these days that people tend to confuse the two.
Right. So when you're considering, like from a an institutional or more of a professional capital provider, is there a margin of, is there a safety that they're looking at, or is there an asset class? I mean, I'm assuming that, a D property or, something like that's not what they're going to, are Bs, and I'm assuming A's obviously, but are Bs, are you able to raise money from
that totally depends on the person or people or institution you're raising money from. Maybe there are institutions, I can assure you, that just want to do B properties, but they'll buy in volume, right? So my point is, this is where doing your research, developing the relationships up front and over a longer period of time plays in, because then you can truly understand what the person's looking for. Because as an example, if somebody's looking to invest in, say, industrial assets or office assets, and you keep pestering them on multifamily assets, right?
Right. You're not.
That's a short way of going to spam directly, right? But cultivating the relationships, taking a step back and actually understanding, right? Because think about it yourself. You probably, I don't, but you probably don't like getting sold things that you don't even want to buy, right? Dude, just don't do that, right? Yeah. So it's the same with these people, because you've got to realize, just because somebody works in an office, wears a fancy suit and drives a Porsche, doesn't mean the person's not a human being. We're all human beings at the end of the day. A lot of these, I can tell you from personal experience, the first step is not the money. You got to talk about money right in the end, man. Okay? If you start with the money, pretty much none of your relationships are going to go anywhere. Okay? You got to understand what people are looking for. You've got to present yourself in the best possible light. You've got to be approachable and amiable and, easy to talk to, but professional. Take that time, develop that relationship. In fact, don't be like most used car salesmen and just come pumping deal. Take a step back. Give the guy a call just like that. Hey man, what's up? Yeah, and let's assume you're doing a deal, right? And this guy's got money, but you're at the start of your relationship, right? And so just be like, hey, I just wanted to call you. What's going on? Just a regular chit chat. And if the person brings up the deal, I know you're working on this, you'd be like, yeah, it's going fine. Yeah, we're doing good. Don't worry about it. You didn't do the hard pitch. People hate the hard pitch. Okay? Let that person ask you. But why will that person ask you? Number one, you're consistent and in the market. Number two, you are doing deals. Number three, you're professional. So when you are talking to that person, not about the deal you want to raise money for, but just generally, you're presenting yourself the right way and you're professional. You know what you're talking about. That person, in it of themselves, because they are a human being, will ask you over a period of time, hey, Darren, tell me about that deal. Or why don't you ask us about that deal? Be like, oh, well, we were so busy with our other deals raising money that I just, I didn't want to bother you. I know you guys are swamped all the time. Don't worry about it. But, next time around, do you want me to tell you? Yeah, or no. No is also an answer. But yeah, I want you to tell me. Okay, I'll keep that in mind. But what's going on? What are you doing for the weekend, right? transition.
Right.
This cannot be the focal point. But look, trust me, when you get to that stage where money is going to change hands, when they are going to ask you questions, trust me, they will ask you the questions. You have to answer those questions. But why do you want to
Right.
hurry
But
the
if you don't have
process?
the relationship, you're not going to get to that question in the first place. So
Yeah, but you understand,
right.
or you'll still get that question, but you don't have to present like 5 paragraphs worth of answers, right?
Right.
Because you can say
Right.
2 words and bam, you're on to the next topic. But the reason for that is because you've established a level of credibility over multiple months and years, which has led to them then when you say those 2 words, whatever those 2 words are, right?
Right.
But like we talked about the 10 failures and then 1 success, that is the 1 success, but the failures are the conversations you've had leading up to that event.
Right. No, I get it. I think too many people when they start off, and I've certainly been guilty of it in my career over in the beginning, is when you're hungry and you're desperate, and it shows, and it doesn't translate well to like, gee, let me invest with you.
Yeah, because look, the more desperate you are, even though you've got you might have a better deal, it's not attractive, it's repelling. So you gotta look, it's a game, man. I'll be honest with you, it's a game. You've got to play the game. There are the rules of the game. Now you don't have to like the game, but that's the way the game is.
That's the game.
Yeah. You don't have to like it. I mean, I don't have to like everything.
No, that's true. I got to remind myself of that sometimes. It's a game. So.
Hey man, every day I need to remind myself of that. Someday I get off a call and I want to break a freaking pencil or something, man.
Right. Hey, Omar, if we could, I'd like to shift gears here for a second. Before we started, I mentioned you by day. I'm an insurance broker. And as such, we do risk management with our clients. And there's a couple of different strategies we consider. The first is we ask, can we avoid the risk? When that's not an option, we look and see if there's a way to minimize the risk. And if that's not an option, then we look to see if there's a way we can transfer the risk. And that's what an insurance policy is. And as such, I've been asking my guests if they could take a look at what they're doing with real estate, and if they can identify what they consider to be the biggest risk. And again, just for clarification, I'm not necessarily looking for an insurance-related answer. Risk is everywhere.
Yeah.
So with that, I'd like to ask you, Omar Khan, what is the biggest risk?
Not having enough liquidity. You can have the greatest asset in the world. If you don't have enough liquidity, you can't survive. A lot of times when you're in trouble, all you need to do is run down the clock and survive. And liquidity offers you that comfort. Or in other words, a lot of times, we are humans. When we're put under undue stress, we tend to do things that we would not do when we weren't under stress. So the liquidity is the cushion that allows you to not mentally put yourself under stress or be backed into a corner for no reason. So even during trying times, you can, for the lack of a better word, continue to do business as usual while you're scrambling to do everything else, right? And you're not foreclosed upon, nobody hates you, you're not dying, none of that stuff happens.
No, I think there's definitely a liquidity test here in the making.
Geez, I really hope it is. I'm sick and tired of being safe and conservative. And my God, I mean, it better pay off now.
Yeah. I think your prayers or whatever, but I think that they're going to be a lot of
prayers were not for the COVID, just so that we're on the record. No. My prayers were not for the pandemic to happen.
Yeah, I appreciate that. But no, it is interesting, and I think that having got myself into some deals and stuff, and recognize just that having capital and being well capitalized is the difference between surviving and surviving and winning versus losing big and losing all of your investment, not just your initial investment, but any of the opportunity on the upside there too.
And the way I think about it is, look, a lot of things in life are, as long as you live to fight another day, that's a win.
Yep. That's good. Hey, Omar, where can the listeners go if they'd like to learn more or connect?
So you can go to our website, Boardwalk Wealth, B as in ball, boardwalkwealth.com. Right on the front page, if you scroll like I think the second, just like a smidgen down, you'll see a box on the right side where you can enter your name, your email address, and how you found out about us. And then you'll get an email. You click on the verify button, and bam, you're into our distribution list, and you can hear my profound thoughts and get the inside scoop on our deals.
All right. Well, Omar, this has been great. I can't say thanks enough for taking the time to talk. I've enjoyed it, learned a lot, and hope we can do it again soon.
That was my pleasure. Thank you for having me.
All right. For our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.